Welcome everyone to our channel, the first one about cryptocurrencies. Today, a quick update on our tool available at TradingZonePro.com. We've introduced a new feature here, which is the detection of divergences, bearish and bullish. As I said, thank you for the great feedback we've received here, and for all the comments you've sent me by email. We analyze each one individually. That's how I would put it. We try to turn it into real substantive value. From our point of view, we would like the entire panel, that is the whole TradingZonePro area, to be available to you so that we can create it together with you. In other words, so that we as traders who are active in the market have all these tools readily at hand. And thanks to that, we won't be making the mistakes that, of course, still happen to us from time to time. So the main premise of our zone is a market without emotions. And I think today we're also taking a big step forward. We've introduced a new feature, which is already available here, of course, on our website. We tested it on our primary service. It works really well, so we decided to launch it today. From now on, anyone who purchases access here, we have great introductory promotions for our tool's debut, will get coupons. There's a limited number of these coupons, 25 in total, so right now you get a 70% discount and a price guarantee. For the entire time that we continue to develop this tool, and up to now, we've been running something called Divergence Swing. In short, you have it here. Of course, if we run the analysis, for example, Ethereum on the 1-hour chart, everything is up to date. I'm recording this at 14:09, so as you can see here, you have a tile that's being calculated and it's called Bullish Divergence. These are all the indicators we're currently calculating. Divergence, no confirmed divergence. So here, of course, we were catching this divergence. We take it as one of the indicators for determining the trend. But as you noticed here, indeed, divergence, I also believe this is very important from a trader's perspective. That is, if I'm considering opening a position, it seems to me that I don't even make a decision unless I see some kind of divergence. And coming back to this, as I said, these tools are meant to work live. So last night, you could say around, 13 hours ago, which is around 1 a.m. on February 9th, I made such a post. The point is that we notice a divergence on the 1-hour chart. Here you have the chart. Of course, this is available on our channel on X, the first one about cryptocurrencies. On our channel on YouTube, where you're watching this video, the first one about cryptocurrencies. We encourage you to subscribe. It's very important to us here, and it's just a small way to show your appreciation for our work. So I noticed that both Ethereum and Bitcoin, after the breakout, you can see here, this is the hourly chart. I noticed that we were dealing with a divergence, meaning the price is rising while the RSI remains at lower levels. And since we determined that such a divergence is occurring, literally half an hour later, we saw something like this, a drop. So we managed to perfectly spot a divergence in real market conditions, meaning a potential price drop. And that was the final live confirmation. Because, as I said, whenever we introduce any improvements, we simply want to test them. Live, because what's the point of a tool that simply won't work in real market conditions? So that was the final test, and I think we can safely release it for now. Make it available to you. How does it work? So now if you come here to our zone, Trading Zone, after logging in, of course, and purchasing a subscription, you have this panel here. So for example, right now we can run an analysis of Ethereum on the 1-hour chart. And here we have, as for the trend, the filter is short, and as for the historical conditions, I already talked about that in previous videos. So as I said, we will keep developing this, so these indicators will keep aligning better from our perspective. That's how I see the development of this tool. So we have a short, and now what happened here? Recently, we have seen a rebound here. So here we have the hourly chart. Let's switch to the daily chart. This is a chart on the Binx exchange. We are a partner of Binx, so we'll also be making all these plays here. So, of course, we had a downward trend. Here there was some kind of rebound, and everyone was asking themselves here the question, is this just a rebound, a trend reversal, and so on? And that's it. Are we heading upwards now? And as I mentioned in the previous video, we don't guess. If we decide that there is a change, if there's a trend reversal, our indicators will simply show that trend change here. How does it work? I showed this in previous videos. I won't, so to speak, repeat myself here again. But basically, if you have the trend filter set to short, we're still in a downward trend. We can also check the 1-day chart. So we're still in a downward trend. Historically, from such points, 65% of the time the market went up and 35% of the time it went down. But that doesn't change the fact, which I also mentioned in the previous video, that the trend is still downward. We don't have any clear signal indicating that a trend reversal has occurred. And since the trend is downward, we're looking for short positions. The best way to open a short position in a downtrend is to open a position at the top of the channel So if we once again look at Ethereum on the hourly time frame and go to the chart, we can draw it ourselves. We can draw a channel, we can draw Fibonacci in a channel. With one click, here you have all the Fibonacci levels, and here you have the channel. So as you might have noticed after this bounce, of course it happened over the weekend, so there are different opinions about these weekend pumps. But as I said, we don't guess. We try to approach this market without emotions. So as we could see, the top of this channel was a good place to open a short position. If you had opened a short position here at the top of this channel, you would have simply taken profits now. And now, could we have caught this move here when this divergence occurred? And I'll tell you, we could have. So now, by utilizing our specialized tool, the entire process is actually an incredibly straightforward and user-friendly one, because we will provide you with a comprehensive notification regarding exactly when this specific divergence occurred. For example, in this case, it happened on the 8th of February at exactly 11 o'clock in the evening. So right at the start of the new day at midnight today, or at least let's put it that way to make it clearer. How do we do it here as well? The chart. This is Ethereum. In a moment, I'll also show it on Bitcoin. So how do we look at this chart? Here, we zoom in on such moments. So if we assume at 11 o'clock p.m., we had this candlestick. And of course, divergence only works on closed candlesticks. So any possible signals here, well, we simply don't guess. We need the candlestick to close, meaning the candlestick pattern must be completed. So let's say the rebound we would want to catch using our tool happened on February 9th at midnight. These were the rebounds, so as we can see here, the price rose to these levels of the upper channel, while the RSI remained. So here we have a classic divergence, so we had a divergence. Now, what would happen if you used our tool? For example, what is the main educational value of our tool? It's that we can go back in time and see how all these indicators behave. Under these specific market conditions, let's try to go back on this hourly interval to the point before this divergence occurred here. So February 8th at 10 p.m. Second, starting on the 8th of February, we can input the data into the system manually, or simply select February 8th at exactly 10 o'clock in the evening, and then we can proceed to execute the full analysis. That is finished as well. As you can see, at that time we had a neutral trend, and since there was a brief uptick here, it was a sideways movement, which from my point of view is fine. And at that moment, the market indicated a high probability from this point that we would go down. If we draw it in somewhere, the chart, it's the chart. It went down, right? But I already mentioned that to you in the previous video. Today I want to present the newest feature here, which is the divergency wing. So we already had it here. We had a high here, which means our indicators are diverging. So we have a neutral, but the market echo is already showing short. We need to increase our vigilance, so to speak. Let's see what happened at 11 o'clock p.m. We still have a neutral trend, but they've already lowered the scoring, so the certainty of this neutral trend is already reduced, is dropping. Here, the Acurenco indicators switched to neutral. And what happened? On February 9th at midnight? Here we got an alert, meaning there was a big volume spike. Market echo is neutral. That also gives us something to think about here. And now let's look at what happened at 1 o'clock in the morning. A message appeared here, divergence detected on this 1 hour interval. If we expand the details, here we have this. So a scoring of 2 out of 3. All the conditions that the price simply has a higher price, while the RSI is simply at a lower value. We have 4 such confirmed candles because there will also be a lot of noise. Obviously, these divergences occur, so to speak, all the time. So we also wanted to be sure to eliminate the noise that arises here and there. That's why we introduced safeguards in our algorithm, requiring that it must be confirmed at several price points on 4 candles. And then if we have that certainty, we give you a signal. So yes, if we are in a downtrend, the main trading is downward. Right now it shows us neutral, let's assume. If a divergence appears, we have a high probability that the price will simply reverse from that point. And that's exactly what happened. That's why such market conditions were met, and that's why I published that post, to show you how it works in real market conditions. And that's exactly the situation we were dealing with. So now, in our trading zone, we're adding another building block for you. That is a few more percent, because obviously no one knows whether the chart will go up or down. You have a 50% chance. We simply want to slightly shift those percentages and eliminate the emotions that guide us when opening positions, taking profits, or even just observing and making decisions about what actions we want to take in this market. So here we're adding a few more percent for you. If you are in the current market situation and you receive a message that a divergence has been detected, you should seriously consider whether this breakout, because at that time the chart looked more or less like this, right? It looked like this. There you go. So like this is where the divergence was detected, right? So we should consider whether this trend will simply continue or if this trend will be downward. Obviously, to eliminate noise, we need a closed candle. So let's assume this candle is still forming. We're basing our analysis on this candle. On this candle, we detected a divergence. So how do we draw it now? The chart. Starting exactly from the point where that specific divergence was first detected, as you can clearly see here, the price chart simply dropped away. This is the main fundamental premise of using this tool, meaning we can effectively add a few more percentage points to our overall success rate. Your assessment, maybe that's how I'd put it, your assessment of the market situation. So it seems to me that now with this divergence swing, you are even more protected by... phone call, so getting back to this topic. So in our trading zone, we add a few more percent to help ensure that your potential market entries are a bit better. Now then, let's see how this worked in the case of Bitcoin. Did all of this actually work for us? Just as we would like it to here. Let's change the chart on BingX and switch to Bitcoin. Well, it seems to me that if it worked for Ethereum, it will be the same for Bitcoin. This is the north, this is that big candle. We also had a divergence here. So it seems to me that our tool should also catch this divergence. All right, let's do Bitcoin. We'll start from 8 o'clock a.m. Beginning exactly at 10 o'clock in the evening, we are going to perform a very comprehensive and detailed back analysis, which will carry on through 11 o'clock at night, and then continue steadily all the way until 9 o'clock the very next morning. As we can see here, we have this significant volume peak occurring at exactly 1 o'clock in the morning. And as you can see, a divergence was also detected on this 1 hour interval. If we also take a closer look at this chart, there was another one around that hour as well. The first one, so there was a divergence here. Well, it was a bit different with Bitcoin. It was different because when it comes to Ethereum, the price completely already dropped from this level. Here we actually had a small bounce up to 71,384. If we look at the Fibonacci, let's see roughly how this level looked here. That was up to the 0.236 level, which is 71,472, and here it's 435, so exactly the Fibonacci. Sorry, we're coming back here. Sorry, this material will be a bit cut up, but the point is to make everything here somehow clear so that you can work live with this tool. All right then, here we had a signal about this divergence. A signal about this divergence. How do we draw these levels? With Fibo, we can apply Fibonacci levels to the chart with a single click. So now, since we have this downward rebound, it should respect the resistances when it comes to the Fibo zones. So we'll do something like this. We'll draw the chart from the moment when this divergence was detected. And now if we zoom in on this chart, as you can see, this rebound was exactly to this level. 0.236 from the Fibonacci levels, which is 701,362. Alright, so now I wanted to share something like this with you, to present something like this. So we're adding another building block here. Everything I'm showing you here, you have available live. Absolutely everyone can use this powerful tool, so let's also take a moment to see how it looked historically. I'm trying my best here, and now that I've prepared a bit better for this specific video, I also managed to find a significant historical value on Ethereum from back when we were dealing with a major divergence. And it occurred on January 14th. January. That was roughly here. If we take the hourly chart around that hour, or maybe let's take the 4-hour chart. Oh no, the 4-hour chart? We have the 4-hour chart. Because when it comes to analysis, we have 500 candles, depending on the interval, so you can multiply it yourself to see what range we can cover. So on January 14th on Ethereum, we also had such a divergence. Let's go back to that period, which is right here. January 14th, Just a moment, the 18th, 15th here. Let's zoom in on this chart to make it a bit more readable. January 14th at 1 o'clock, let's set it here. So yes, as you can see, again we have here a breakout after a move, a breakout. The price made a higher high. The price went up, but as you saw on the RSI, we already have a divergence, so the RSI didn't follow this increase in price. So now let's see how our tool behaved in this situation. January 14th. So let's go to January 14th at 1 o'clock. No divergence has been detected yet. In 4 hours it will round up, so for example, if you choose 4, it will go to 5. You get it, always up to that interval. We currently don't have those specific time frames available, such as 9 o'clock or 13 o'clock. However, if we look closely at the screen, we can see our technical indicators here, which are being actively drawn in the section below the main price chart. These metrics clearly showed us that the relative strength index, or RSI, is already in an oversold position, currently sitting at a value of 17, which suggests a potential reversal might be coming soon. At the 21 mark, and we finally have it. At 21, a divergence was clearly detected. So right here, we had a trend finder that was actually incorrect. As for this specific area, well, you could say there was some significant upward movement in the trend here, of course. And during this particular upward trend, a divergence was detected. So this is a very important signal for you that something unfavorable is happening with this upward trend. So if we look here, we have this chart at these times, and here we have the indicators with that date. If we draw this chart further, as you can see, the price dropped, which means the trend ended. Now we can also trace when the trend faltered. I already showed this in the previous video, so here we already had an interesting situation. Now let's trace when the trend faltered and switch to short. So we have about 5 analyses back. Next, we still have an upward trend from the 21st. The MACD indicator, which is drawn below the chart, is already suggesting a flipped bearish signal. So this upward trend is very close, so to speak, to being finished. 16 at 1 in the morning. And let's perhaps consider taking a measurement every 10 hours or so, just to ensure that the overall dataset doesn't become excessively long or difficult to manage. That brings us to 21. Moving forward, we can clearly see that we still have this consistent trend continuing. This leads us directly into the 17th of February, where the pattern remains quite visible. It is still quite long. The 10th and the 21st. Perhaps that is actually a bit too long for this, but I am not entirely sure yet. Now you will be working with this, so on the 18th day of January, we still have a very long way to go. Oh, and now the 18th has shifted into a neutral position. As you can clearly see right here in front of us. Here we also had an upward trend from those hours, which would more or less confirm the overall upward trend. Now let's assume it lasted for a while. So at this point here, it has already turned completely neutral for us. Let's go ahead and take 18 as our example. Neutral, number 21. Neutral, but we have a big volume spike, so let's expect some major changes, very close to 19 at 1 o'clock. At the 5-minute mark, it remains neutral. At 5, it is still neutral. And then at 17, it stays the same. Neutral at 21. 01, 20. 11, 20, and we have a short. All right, a little bit. It lasted, but like I said too, we want to be sure. So if we reverse the trend, we just want to be sure, right? So now, as we look at it, of course, this was historical, so obviously we can just expect something here. So if we now draw the chart from the point where the trend switched to short, as you can see, the chart dropped. And that's exactly the purpose of this tool, the purpose of our entire trading zone area. We try to help you eliminate emotions and rely solely on indicators. So now we're adding something like divergence swing for you. I think this is another building block that will help you become even better traders in this extremely tough and complicated market. Alright, so is it possible that this current short-term trend might actually reverse maybe just for a single day? There was also a slight upward bounce occurring right at that specific point. So we'll see if we can actually catch it. No, I'm just carefully analyzing and running through the whole day on the 4s at 9 o'clock in the morning. And also at 11 p.m. at night. We're still in a short. And maybe this is just a quick market update. Where are we right now? Looking at it strictly from our specific point of view, we are definitely still in a significant downward trend. Until there are some technical or historical, or unless there are historical or technical values, that would indicate the trend has shifted from a downtrend to an uptrend. It will change. I showed this in the previous video, that when a trend changes, we simply don't catch it. We don't catch the tops, we don't catch the bottoms. So if we get confirmation that the trend has changed, an automatic trend filter will appear here, switching from short to long. Until then, all our trades, everything we do on the market, we treat as trades in a downward trend. So if there's been some kind of rebound, we look for a place to take a short position. Alright, that's it. Here, on the daily chart, we have quite a large channel on the candles. Let's see how it looks on Ethereum at the moment. We'll turn off this Fibonacci. But here too, it looks like a textbook move to the upper channel and simply taking a short position. So right now, as far as the channel is concerned, we're at 74%. Of course, we don't open a position in the middle of the channel. We observe and see what happens. But for now, we treat this as a play within a downtrend. So we're looking to get as close as possible to the upper channel in order to take a short position. Maybe let's quickly look at the 4-hour and 1-hour charts to see how it looks on Bitcoin. On Bitcoin, the 4-hour chart, on the 4-hour. We still have a divergence here, so this divergence is still playing out. So if we have a short trend and we also have a divergence, it really means the market is still echoing short. Damn, there's a high probability that from this point will also go down. We'll see how it turns out, how it ages, as we say here on the channel. So from our point of view, we're still in a downtrend. And today we've released a new feature for you called Divergent Swing. Alright, I think that's it. This video is a bit chaotic, but I also wanted you to, well, we have these tools available today, so I just wanted you to start using them right away. Also a quick overview, and we're about to make a post on Twitter as well. So those who already have a subscription can use it right now. So, of course, we encourage you, as I mentioned, and will keep mentioning, probably in every video, this is our only way to fund further development. Paying for servers and implementing what you write to us here is only possible thanks to this subscription. We don't have any sponsors, we're not a huge company, so we can only thank you for your support. Of course, all likes and thumbs up are also very much appreciated. It's also always feedback for us, which allows us to grow, right? We always get a bit of a boost from it, even if it's just a small one. So once again, I encourage you to get a subscription, especially when it comes to crypto bubbles. Today, the week is red. Today is red, the month is red. Well, we're in tough times, so we'll see where all of this leads us. And so that you have a gentle beacon and can turn off those emotions, let us give you our tool here. The trading zone area. Alright, take care. I encourage you to buy subscriptions so you have everything at your fingertips and so you can be a bit better prepared, armed for this tough market. And like I said, nobody knows, we don't know either whether it will go up or down. We simply analyze indicators, analyze historical values, and analyze how the chart behaved in those situations. And now we're also adding for you divergence detection. Standard divergence detection exists in our trend as a tile, but I would like it to be even more visible so you get an even clearer signal. Here you can read these indicators in every interval. Maybe I'll add some description here as well so you know what this is about, what these indicators mean. And when these indicators change somewhere, even if we go back here to this point, 23, if we do an analysis. So, if, for example, what indicators they have, if nothing is detected, you simply won't have any values here. It may happen that we detect some indicator 1 out of 3. Like I said, now we're trying to eliminate this noise and detect the most important divergences. So does it work? Well, I simply demonstrated it in this post on a real example. A real market situation. So at this moment, purchasing our tool would have saved you from losing $2,000 in 15 minutes. Alright, best regards. Talk to you soon. We're constantly working, constantly developing. Maybe this as well, we're working here. This is our server, our workspace. We're working on this trading world. I talked about this in more detail in the previous video, that we also want to provide protection. To protect you in a psychological way, I might say. Not just historically or emotionally, but also psychologically. So if there's a trade that we determine is a gamble, that the conditions are basically pure chance, a gamble, then we'll simply suggest that in such situations, with that kind of leverage, with that kind of position, you shouldn't open the trade because your chances of success are only a few percent. So, alright, keep your fingers crossed for us. Best regards, talk to you soon.